Yo, welcome to Stack Digital Figures page. We will be giving a lot of game, but this is not financial advice, right? Disclaimer, we are not financial advisors. It's not financial advice, right? Please risk everything on your own, right? There is losses when it comes to trades, so make sure you're risking your losses and, not taking every single thing I say for word for it, right? If I say go buy this or that, if I say go buy, sell this and that, make sure you're taking your own risk because we're not actual financial advisors. Thank you guys. Yo, what's up, y'all? This is Lee Aaron with Stack Digital Figures. Um, This is like my second, third take because I went through it. My audio wasn't connected, so I'm kind of laughing at myself. But this is gonna be a good one, y'all. So episode 3, wagers and brokers. Gonna go over leveraging, wagers, brokers, everything you kind of should be using, right? The platforms you need to be using, how to actually get straight into it, right? A lot of people are like, oh, what broker are you using? What platforms are you on? Like, what website do I need to start trading, right? This is it for you right here. So first we're gonna go into lot size. This is basically the wager, how much you can profit per pip, right? So starting out a 0.01, which is basically called a penny lot size, right? That first number is basically your lot size. 0.01 penny lot size is going to be 10 cents per pip. There's no such thing as 1 cent per pip. It's going to be 10 cents per pip. So if you're using a 0.01 lot size, you profit 10 pips, you're going to be $1 in profit, right? Pip is just price percentage. That's basically when you see the price going up and down, that's how much you're earning each trade, right? And the wager is basically that lot size. So I call it a wager because that's kind of how people can understand it, right? It's the size of your position. 0.02 is going to be 20 cents. 0.03 is going to be 30 cents. 0.1 is going to be $1, right? If you see a trend, every time you go up in that decimal, it goes up as well. 0.20 is going to be $2. A 0.31 is going to be $3.10. 1.0 lot size is going to be $10 every pip. A 20 lot size is going to be $200 every pip, and just keep going. Usually people won't get up to like 10 and above lot size unless they got like hundreds of thousands or trading with millions in their account, right? How I like to recommend it is usually what I would go base off of, right? Is a 0.10 lot size per $100 in your account, right? So if you have $500, you should not really be going above a half pip or a half lot size. All right, and this is just for your account in total, right? So if you want to be trading 4 trades at once, those 4 trades should equal up to that 0.10 if you have $100 your lot size, right? So how I would split it up, just so you can envision it, 2 trades at 0.05 is going to be a 0.1 is that point equals up to that 0.10 lot size total for the day, right? So if you have a 0.05, you have a 0.05 lot size, and you're up 10 pips, that is going to be $5 in profit, right? I'm trying to envision the numbers myself, seeing so many numbers running through this life. That's what it's going to be for you, right? Hopefully that's kind of digestible. Comprehensive yourself, right? If you enter a trade using a 0.05 lot size and you close 100 pips in profit, how much did you earn? Pause it and calculate it. Most beginners are going to be in this phase right here where you're calculating each trade, right? You have your lot size, you have any pips you're trying to go for, you got your take profit, the area you're trying to target. You need to know how much you're going to be earning once you hit there, right? If you want to earn $100, $50, $500, $5,000 for that target limit, you need to know how much leverage to get you there, right? Most platforms now are going to tell you how much it is with that take profit, but it's best to calculate it so you can know, okay, how much am I risking, how much earning, how much do I need to leverage, what should my lot size be in order to get this much in return, how many pips do I need to go for able to get $1,000, right? So answer, how I would do this, right? 0.05 lot size, right? So you got a 5 cent lot size. It's going to be 50 cents per pip. So 100 times 50 cents is going to be $50. Guess you didn't really have to pause that, but leverage, position, and size. The numbers you see to the left are usually what you're going to be seeing when it's explaining leverage. So you got that 1 to 500. That's basically going to be for if you have $10 in your account, which is like very, very minimum. I don't even know why I did $1, but you cannot have $1 trade with $1. But I'll try to make it simple for people to understand, right? If you have $10 in your trading account, that's actually going to be a $5,000 in the market, right? So if you're using a 1 to 200 leverage, which is basically the highest you'll probably see for regulated brokers. We'll get into regulated, unregulated brokers in a minute. You usually only see 1 to 500, rarely in regulated brokers, but you'll see it sometimes in unregulated brokers. But let's say you're using that 1 to 200, you have a $10,000 in your trading account, right? That's going to be $200,000 in the market. No, because I said 10,000. That's going to be $2 million in the market, right? So that's basically what it's kind of like times by, right? How that works is your broker, the platform you're using, is going to be able to leverage you that money. You're basically trading their money with your live money in that account. That's how that's going to work. So a 1 to $100,000 in account is going to be a position size of $100,000 in the market. That's what it's going to be seen as. And yes, most likely, if you're live, your position is going to be able to be seen in the market. Brokers, right? Pros and cons. Regulated brokers, right? So obviously, they comply to a lot of SEC's regulations, rules, CFTC, all that good stuff, right? So they're pretty up to court with everything in the U.S., right? As long as they're like U.S. regulated brokers, they're going to abide by all the things. You'll get your money when you're going about it. But the flip side to that is you're not going to be able to leverage as much. You're not going to be able to. There's going to be like a lot of like KYCs, a lot of verifications. There's nothing wrong with regulated brokers. You should definitely go with regulated. If you're looking to like withdraw and take your money back into your bank account, right? A lot easier for taxes and everything. You're gonna be able to like file how much you're actually earning. Unregulated brokers, right? Now, I ain't gonna say pros, but the reasons why people use unregulated is because you can get really high leverage. So what a high leverage does for you, right? Which back to the screen of leverage. Basically, right, like that 1 to 500 or higher, you get to be able to risk more. So let's say you have $1,000, right? You're gonna be able to risk more of that $1,000 that you have before it will cut your trades off. A lower leverage, you're not gonna be able to have a higher lot size. It's going to shrink your lot size to the max you can use, and it will cut your losses way sooner than like risking your $1,000 to $10. You might risk it to like 300 or something, right? But with the unregulated and higher leverage, you're gonna be able to risk more, and you're gonna be able to profit way more because you're gonna have a higher lot size. So that's what it does for you. Because you're trading with more money, you get to be able to have a higher lot size. Now, cons of unregulated and why people don't recommend it at all is basically, right, they're not usually in the US. So let's say you put in $100 and you profit 10 million. They have no obligation to actually pay you a dime, right? So they could literally run off with your money anytime, do not to pay you back. So that is the flip side of it. If you find a trusted, unregulated broker, that's good for you. The ones I know are no longer even in existence, which sucks, but that's how it works. And it's also a little bit harder for tax times if you want to report your earnings. Like if you made $1 million, actually, right? You want to keep track of every single trade you made, your entries, your extra points, times, and all that stuff, so you can report it and kind of show how you earned that. So it's a lot more work and tedious for taxes, but it's not that bad if you have like a track sheet, which we'll get into like journaling everything in this episode as well. But that's my pros and cons for regulated, unregulated. We'll get into brokers specifically to use, but if you ever hear like an unregulated broker, you're looking for your own broker, make sure, I will say, that it's regulated, right? Because regulated brokers are obviously a lot better for US residents. If you're not in the US, look for your own country's brokers so they can abide by your government and such, right? Now, brokers. These are the ones that I personally have found and are using right now, right? In a certain sense, right? These are the ones I trust the most, right? I've dabbled a few different brokers. The brokers I like the most. So I had a few brokers, right? And some of them just literally disappear. A lot of them been disappearing this year, right? 2025. So all three of these are regulated. HeroFX is one of my go-tos for recommendations right now. But I also use a partner code. Find somebody who's already using it. Get that partner code. It'll help you with your deposits. It will help you. It'll help them also, right? Earn whatever with the brokers, and just better to use the partner code, right? Honko X, I think it's also called like Honko or something like that. which again, use a promo link. So find somebody with that and use their link so that you can actually get a deposit bonus, right? You can get up to like 200, 300, even 500% I've seen of your deposit, right? So if you deposit $200, you use someone promo link to get 200% on top of that, you're gonna get an extra 400 for your 200. Live FX is another one that I would trust. I haven't used it yet, but I believe it's something like Live FX. So that's one I know. All three of these are regulated. Honko, I know, has been around for years on years, like before I even started trading. HeroFX, been around for a while. Haven't done too much research on it, but that's one I trust. There's another one coming out soon. It's been in this huge ass update, and they're saying they're gonna come back. Like they got like my money locked up on their platform, so I'm waiting for that one to come back. They're renaming themselves, they're rebranding themselves, so I'll kind of update you on what that one's looking like. But that's basically my main one, which my money's been gone for months, y'all. Like shit, I had to move on and just kind of trust that the next platform got me right, because it is a regulated broker, but it's been in maintenance for months where it just shut off. The website's gone, everything's gone. We're just kind of waiting for them to email us back, I guess. Now futures is something we'll get into. This is the Forex video, but the two futures platforms that I would recommend and use, Top Step. They came out with this cool little update. We'll probably go over that once we get to futures. But Top Step, I like them. There's like Take Profit futures or something like that. I don't really like their platform. It's a little tedious, but if you like to trade on TradingView, I think that's a good one for you. Another one that I trust is Aqua Funded or something with Aqua, right? But I think they renamed themselves to like E8 Markets or something like that. But I know a lot of people who are using that. It's regulated. They love it. And I would recommend it. If you're using futures, that's the platform I would use. Now for journaling, right, and like reporting your trades and all that good stuff, I would recommend, if you want a platform, me personally, I just use my notes. I kind of understand what you need to entry and kind of what it should be looking like. If you have another app, cool. I don't think there's really any free apps or website where you can really journal your stuff, unless you're using like a spreadsheet on Google or such like that, right? TradeZella is going to be the #1 platform to use for journaling. They even got this Black Friday sale. You see they're trying to promote it as $25 a month. It is a little bit pricey, but I think this is probably the best way to go. Obviously, this isn't a clickable link, but this is just one that I saw today and was like, yeah, this is something to try to get out there before it's too late. So looks like it ends this end of Black Friday, so end of this week. People may see this months from now. I would still recommend TradeZella, even without the promo or a new promo. It's best platform out there for journaling. I believe that's all I got for this slideshow, but extra notes. So y'all, this is the 3rd episode of Intro to Forex. Each one has been like about 20 minutes, right? So this is almost like the first hour of actual learning how to trade at Forex, right? I personally, this is gonna be a little bit of ranting, I've done close to like 10,000 hours literally in the lab, just learning how to do this stuff. So it took me a long time just to come up with, like, you know how many people need to research just like what platforms to use, what brokers to use, what leveraging actually is, right? Like comprehending lot size, your wager and stuff like that. So I'm hoping this is helping a lot of people asking for platforms, all that good stuff. These are like your actual trading accounts, right? So if you want to like analyze the market, obviously TradingView, right? There's nothing wrong with getting a subscription to TradingView. And we're gonna keep moving forward, right? Yeah, I appreciate y'all's time. Ain't gonna keep y'all too long. Y'all know where I'm at. Catch y'all the next episode.